Great. Good afternoon, everybody. This is the Town Dewey Beach Investment Committee meeting. It's being held at the Dewey Beach Life Saving Station as well as via Zoom. Today is Thursday, April 11th, 2024 at 5 p.m. With that, I'd like to convene the Investment Committee meeting with opening ceremony starting with the Pledge of Allegiance. So please stand. Pledge of Allegiance. Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you very much. From a roll call standpoint, I will ask names. I'll say them out loud. Let me know if you're present. Bernie Krause. Here. Suzanne Evans.
Present.
Eric Nelson.
Present.
And the other two members I don't believe we have yet, which would be Michael Schaefer and Dennis Trencher. I'll record if they do come in via Zoom or physically here, but we do have enough for a quorum, which means any decisions made tonight are in accordance with our charter and code. We are currently without an investment chair. As part of the duties and powers of the mayor, I am part of all committees as ex officio, but I am not a voting member. So whatever we go through tonight, there will be no votes from my own perspective. With that, do I kind of have a motion for an adoption of the agenda?
Also motion.
Second?
Second.
All in favor?
Aye.
Eric?
Aye.
Okay. Any public comment before we get into the heart of the meeting? None there, Kate? Okay. Can I have a motion for the approval of the February 8th, 2024 meeting minutes?
So motion.
Second?
Second.
Should we switch those since you did the minutes yourself?
Well, I approve of that.
All right, we'll switch those if you don't mind. So it's motion second and all in favor?
Aye.
Aye.
Great. Number one, discuss and possibly vote to approve the ex officio committee member Bill Stevens as chairman pro tem. Do I have a motion?
Motion.
Second.
All in favor?
Aye.
Aye.
All right, we're off and running. Presentation discussion by Dominic DeFibo regarding Brown Advisory portfolio. Dominic, I'll turn it over to you to go through what you submitted and what we have in front of us.
Great. Thank you, everyone. Good evening to anyone who may be listening. Want to first go ahead and share my screen, which obviously makes it much easier here. Okay. All right. So typically, as we go through, kind of just give an overview of of the portfolios in which we have under management. So we manage essentially three different portfolios. We have the general fund, kind of short-term fund, and then we also manage a short-term beach replenishment fund, and then we also have a long-term beach replenishment fund in which we manage. Total assets under management as of 3/31. We're just shy of 7 million, 6.982 million under our management. As we typically do and have done in the past, we typically go through kind of the long portfolios, which have more of the risk assets. The short-term portfolios, both in the general fund and in the short-term beach replenishment fund, are kind of cash fixed income like securities in those portfolios. So I'll go ahead and start with the beach replenishment fund. At top left is kind of the performance history of this fund with the relative benchmark kind of highlighted underneath of the performance numbers. So quarter to date, this portfolio was up 2.6% relative to the 1.8% benchmark. The trailing 12 months, the portfolio is up 10.7% relative to the blended benchmark, up 7.4%. Since inception, this portfolio is up 3.6%, outperforming the relative benchmark 3.3%. Top right corner, we have kind of the current asset allocation as of the quarter end. We have our targets in line with the investment policy statement. and then our kind of current weightings within each of the asset classes listed below. So we have a slight underweight to emerging markets and fixed income, and slight overweight to U.S. large cap equities. Kind of moving on to kind of the individual assets and what's driving that performance. So within fixed income, our Voya Intermediate Bond Fund had had a pretty flat quarter, but kind of better than its intended benchmark. Flex equity portfolio continues to be really a real driver of overall performance. We've been invested in this particular strategy since 2015. So kind of 9 years in that particular strategy. And that is actually up 14.3% on an annualized basis relative to the S&P 500 that's only up 13.2%. So again, really been kind of the driver in a lot of ways of overall performance here. Small cap strategy on the quarter up 5.6 relative to the Russell 2000 up 5.2. Global leaders, global strategy up 8 relative, slight underperformance on the quarter. But as you can see here, overall since inception has continued to kind of outperform over the long term. Emerging Market Select Fund up 2.2%, kind of pretty close to being in line with the benchmark on the quarter. Up 6.6% relative to the index, up 3.5 since we started investing here back in 2019. So good kind of outperformance kind of across the board from all of our managers. So we kind of like overall how we're positioned. On the short-term side, so this is the short-term beach replenishment fund, up about 0.5%. Again, this is all kind of T-bills and fixed income, up about 0.5% relative to the Treasury bill index, up 1.3, and trailing 12 months up 4.6 relative to the kind of cash index of 5.3. The general fund on the quarter up about 0.5% relative to 1.3% on the index. On the trailing 12 up 5.7, trailing a bit on the overall long term, but still positive. And we've talked about this in past meetings. I will say within this portfolio, we've talked about kind of thoughts around having fixed income in the general fund. I would just say that we hear that concern. We actually have made a change since this to kind of go back to that kind of cash and T-bills. I think as we've seen in the last kind of Fed meeting minutes, inflation remains sticky. We probably are going to see higher rates for longer, and really kind of thinking about the balance of fixed income, cash, T-bills within the portfolio and some of the stipulations within the town. We thought it really just more diligent to kind of be within short-term treasuries here until we have some kind of real clear evidence that rates are coming down in some significant way. Otherwise, we think we made a good return on the fixed income asset since we purchased that, but have decided to kind of pivot a little bit back to kind of our original weighting, kind of 40% cash, 60% kind of 3-month T-bills for the time being. And so we'll kind of wait and see what happens from here. But we think it's just overall kind of a more diligent approach. And given some of the concerns that the commissioners had in our last meeting, we wanted to just highlight that as a change that we have made and really kind of taking a wait and see approach from here on out. I'll stop there on the performance side before kind of getting into the macro.
Just a real quick question. When I look at the report itself and I'm looking at the weight of 40.3 on cash and equivalent versus 59.7, that's the ending value. Is that correct? On page 13? Is that how that's calculated, the weight? Because, like, for example, on the prior report where you showed the beach long, and it might have been 72 in equities versus 70, you can't, it's because of growth. I would assume because it's the ending value. Is that a fair statement?
So the target, all right, so let's just go back. We'll walk through that real quickly. So here, these targets are stagnant, right? So those are the weightings that we have a target towards. these are the weightings as of 3/31/2024. And so we might let large cap run because it's continued to
Right.
outperform. And where we think we can kind of add the most value here. So we'll let that kind of be a little overweight. Emerging markets where we have a little less kind of conviction, we'll trim that. We also kind of in this portfolio, we were running a little lighter on fixed income. So we did a little bit of rebalancing in the portfolio. We were a little overweight small cap. So we did some rebalancing within the quarter to kind of get that fixed income number back up to about 70%. And so that is the ending value as of 3/31. It is due to one rebalancing that we've done. So buying and selling, and also market appreciation.
Great. Thank you for the clarity.
Sure. So any other questions related to performance? Oh, Eric.
So,
Yes.
so for the new guy,
Sure.
those targets, how are those targets established, and how often are they reviewed?
Yeah. So they're established through the investment policy statement
Right,
that
so-
the committee then reviews. And
Okay.
it's a little bit more complex, and maybe I'm probably not the best one to speak to this. Maybe one of the commissioners can chime in here, but there's an investment policy statement,
Yeah,
and then there's
okay.
another town document that kind of
Yep.
oversees the investment policy statement. So
Got it. No, I just want to make sure it was tied back to that. I did. Thank you for the clarification.
Of
Sorry
course.
to waste the time.
No, not a waste of time at all.
Okay.
I mean, please, Eric, and if this is I believe this is your first meeting, first time seeing you, so welcome. First off, happy to have you, but
Thank you.
don't hesitate. We're here to help. We're here to walk you through it. So if you have any other questions,
That's cool. I've been involved in ICs before in other outfits. I just trying to learn the way around this one.
Yeah. No, well, we're happy to have you. So all right, so I would just say overall, I mean, I think performance has been really good, and I think we feel good about where overall performance has come, and where the long-term performance has been in this kind of longer-term portfolio. And so we've made some small changes here and there, but we haven't made any large changes. We've done some rebalancing, as I said, within the quarter. But maybe just kind of getting back to kind of what's driven, what's driven markets this quarter. Really, I would just say coming into this year, certainly the perception that we were going to see a lot of rate cuts by the Fed coming into 2024. That's kind of somewhat been tapered by really sticky inflation. We just had a really a sticky inflation read a couple days ago this week, and so now the thought is two interest rate hikes is what the market's two interest rate cuts this year is what the market's pricing in currently. Certainly, as you see here, challenges kind of in kind of non-U.S. economies as we have wars around the world. Certainly a slowing China from what we can tell, although we don't get a whole lot of good information out of them. But really, it continues to be the same as we've talked about before, right? It's waiting, seeing what the Fed's going to do, and really that has been the driver. We certainly have seen risk assets continue to tick up in the first quarter on really the back of this secular growth trend in artificial intelligence. So definitely there's some slides in here if you've read through it that kind of touch on AI and really how that's impacting the broader market. But overall, S&P was up 10.6% on the quarter. Investment grade bonds down about 0.8%. So, a little bit challenging market. We certainly had a pretty big sell off yesterday in the market. Had an okay rebound in some parts of the market today. But I think we're going to continue to see this kind of rocky market conditions as there are geopolitical risks out there, as we are in an election cycle, as we have kind of artificial intelligence and full employment that are kind of pushing the economy forward. It is going to be a bumpy road throughout the year, but I think we have a portfolio that's conservatively positioned for the town, and really kind of the highest quality assets that we can put in the portfolio. So I think we feel good about portfolio construction at this point in time. You know, we can kind of go into some of these slides, but really this is just kind of showing that, you know, the part of the market that's been US market where last year we saw really all was multiple expansion. We're actually seeing some of the returns this year in the market really being buoyed by you know, really expectations that you know, earnings, there will be some earnings growth that has been projected this year, and so that's been really kind of a leading indicator here in the U.S. It's not been the case necessarily outside of the U.S., and so you know, it's something that we continue to look for. Obviously, it's much better than what drove the market last year, which was all multiple expansion. So, like to see that earnings growth, positive sign here domestically. You know, another thing that we've talked about in the past is just kind of the overall kind of equity risk premium that's in the market. You know, we still see kind of that, you know, a slight equity risk premium. So the potential return for stocks versus bonds, you know, most of what we manage for the town of Dewey Beach is within the fixed income market. And so it's nice to finally have some returns coming out of our fixed income, you know, our fixed income assets, which is great. And so that's certainly a positive momentum for this portfolio. I guess another really to just kind of show, you know, again, we talked about last year and maybe, you know, at the beginning part of this year, kind of the real drivers of returns last year were kind of the Magnificent Seven, right? So these 7 stocks kind of listed here on the left, and their performance relative to the broader market. If you look at kind of, you know, calendar year 2023, certainly a lot of big numbers there. But if you look at kind of Q1 of this year, it's been a different story. It's really been, you know, Nvidia, some Microsoft, some Meta, some Amazon. But outside of that, you know, certainly Google and Apple and Tesla have lagged the broader rebound in those stocks, or not even rebound, but, you know, have just lagged the other Magnificent Seven stocks, and, you know, for a multitude of reasons. You know, we don't own Tesla in the portfolio. We do own Apple and Google and Amazon within the Flex portfolio. We own Meta in the Flex portfolio, Microsoft as well. So, you know, we have a lot of exposure to this part of the market, which has been part of the outperformance. But, you know, overall, that's just been a big story within the market. Yeah, I mean, I think, you know, as we think about kind of moving forward, you know, what are we watching? What are we looking at? And I think really one of the biggest drivers has just been kind of the resilience of the U.S. economy. It's been honestly quite remarkable to see, even in the face of rising interest rates, you know, what's happened. The consumer has stayed strong, in large part because we've had full employment, and so the consumer, which is such a driver of economic growth, has continued to really be resilient. And that has not been the case, as you can see in this chart on the right. Has not really been the case in other parts of the world. So in other parts of the developed world, I should say. And so again, good positive momentum here in the U.S. You know, you talk about CPI. Certainly, it's been sticky. Certainly, in large part, in a lot of ways, it's been sticky because of rising commodity costs. Some of those commodity costs are kind of leading indicators of kind of future growth in the U.S. and China, the two world's largest economies. But yeah, I mean, it's one of those things that we have good economic growth. Inflation's being a little bit more persistent than we would have thought. You know, and so that's a signal that we're probably going to have higher rates, you know, for longer here in the U.S. and not get as many interest rate cuts as we may have thought at the end of the day. So this was kind of the expectations. I think it's a cool slide because it just shows how quickly sentiment in the market can change. And so if you thought, you know, back in December of 2023, when the market was kind of ripping to the upside, you know, the expectation was that we're going to have 6 cuts in the market. And so rates were going to, in 2023, or 2024, sorry, we're going to go down to 3.7%. Well, that expectation has changed. And and probably has even changed even more. But the light blue market implied expectation for March of 2024 is now we're only going to drop to 4.5%. I would say we're probably maybe drop to 5, maybe 4.75% by the end of the year, after the last Fed Powell, his commentary and the inflation that we saw. So hard to tell what they're going to do at this point, but given the resiliency in the U.S. economy, we've been able to absorb these higher rates and continue to grow, which is ultimately a good thing. I guess I would just say that the one thing that we continue to look at are opportunities within kind of artificial intelligence is it's certainly, if it hasn't affected you yet, it will at some point in the near future, as the development of artificial intelligence, which has been around for a very long time, continues to be a big driver of growth within a lot of companies that you see here. But we kind of broke it down to say, where are different companies and how do they fit within kind of the AI tech stack? So if you think about kind of the bottom here, the technical infrastructure, right? So that's chips, that's the silicon, that's the fabrication, that's the design, that's the ASML, which designs the actual machines that manufacture the chips, NVIDIA that designs them, TSMC that produces those. You have the cloud compute, which these large language models within artificial intelligence need compute power, and so they need that infrastructure. But the superscalers in cloud and Google Cloud and AWS and Azure, those companies are really looking to build out because these large language models take so much compute power out of the data center that they're having to make the data centers 5-10 times larger than they are today. And so they need a lot of that infrastructure, which has been driving the NVIDIAs and the ASMLs and the AMDs to produce more and more and more chips to go into the data centers. Then you have obviously the large language models, these foundational models. These are your OpenAI, your ChatGPT, your Google Gemini, Meta Llama. Those are the actual, they're the AI that's actually producing the results for the end user. And then you have the other parts of the software stack that are leveraging either their own AI or their already existing business, and they're leveraging AI to make it more productive, or leveraging these large language models to create some sort of productivity gain within them. So it's a story that we've been talking about for the past 9 to 12 months. Maybe fortunately or unfortunately, we're going to be talking about it for a long time into the future, more than likely. So, more to come there, but just to say that, we have a lot of exposure to these companies within the portfolio, and we'll continue to kind of add, they'll continue to add new names to the portfolio that are beneficiaries or leaders within this space. So just thought it was worth highlighting some of the drivers within the portfolio. With that, I'll stop and see if there's any questions.
I'll just jump in and make a quick comment. I mean, I was watching the news last night, and my wife and I typically watch Lester Holt, and you don't realize how much AI, artificial intelligence, is creeping into the world. Whether I saw an AI psychologist app where they were feeding into reports of people who have the first step to care. To last night, there was a an article on architectural design, where somebody would say, I want a log cabin with 4 bedrooms, and and AI was able to generate what they needed. And of course, the architect was like, well, that'll never fly because, you still need people, but it gets you to a certain point where you can move forward and have informed decisions quickly. So it's pretty impressive.
It is impressive. It's gonna impact all of us, hopefully in a positive way. And who knows what will happen in Washington at the end of the day. But it is it's certainly not just a fad or kind of it's being compared to the invention of electricity and the fire and the wheel. I mean, people are comparing it to these just massive, what seem like not technological advancements, but at the time they were technological advancements. And so we expect it to be a big part of the investment universe going forward. So thought we would just share some thoughts there. And
It's pretty scary.
Yes.
You know, I won't show it because I know we're being videotaped, but a friend of mine sent me a video from Joe Biden saying that, you know, Town of Dewey Beach is doing such a great job, and it wasn't Joe Biden, but you couldn't tell at all. But I'll open up for committee if you have any questions. Don for Dominic.
That's cool. And well, Eric just said he's technology consultant by trade, so well versed in it. So he can be our resident AI consultant. Look forward to it, Eric.
Yeah, no, happy to help. I do have a question along different lines. So I'm curious if there's any type of I understand benchmarking against the asset class benchmarks. I'm curious, and this is not something that we'll figure out or decide today, but I'm curious if there's any type of benchmarking information that, number one, shows what a typical municipality like Dewey has as an asset classification, and then second, you know, how other municipalities are performing against that. I'm just, you know, just always kind of looking for other benchmarks to kind of measure performance where we can.
I don't know of any, honestly. I mean, really, you know, we have our investment policy that we're, you know, beholden to, and you know, we look at it versus kind of a global index and fixed income index. And so for us, that is the market that we're investing against. And so that's how we have traditionally. I don't have any sense of a particular municipality index that I have any access to. Maybe the town does, but no, I don't personally. No, sorry.
Thanks.
Dominic, in regards to your overall presentation, you know, as I look through the numbers and I net everything out from the unrealized gains to realized and long and short and fees, it looked like for the fiscal year ending March 31st, 2024, we ended up somewhere between 9 and 9.5% net return, which is, you know, great from a performance perspective year over year. My question for you goes into the three levels that you brought out in terms of the geopolitical atmosphere, the interest rate risk, as well as now we're also in an election year. Is it possible for you to provide the committee, which would then could provide the council with any recommendations as to secure the principal balance, which is part of our investment policy?
Yeah.
So I'll stop there to let you go. And you don't have to provide those recommendations today, but I just
I
know that.
think, I will look. I mean, it's a good question, and I understand the concern. I wish I had a crystal ball to say what would happen, because at the end of the day, we really don't, right? And what we can do is continue to invest in really high quality companies and businesses that are ultimately going to drive the return. Hopefully indifferent to whoever's in the White House. I think what we did, because the short-term accounts have a different IPS than the long-term accounts, right? For the long-term account. So our mandate is different for each of those. And so, and what actually we can invest in. So it's those short-term accounts have very strict kind of underwriting on what we can invest in. In the general fund, I believe Commissioner Persinger during our last meeting, had some concerns about kind of the falling, just falling below or being in a negative territory for that account. And so kind of in hearing, we kind of got the sticky inflation number this week. We actually went ahead and sold out of that bond fund as to preserve the principal there. Because in my mind, if we thought that rates were going down faster, we would certainly have stayed in that bond fund because it would have benefited. If we're going to be up here higher and we think kind of the 10-year is going to continue to tick up, which it could in this environment, we just felt it prudent to go ahead and trim that position. and get back to kind of a cash and T-bill type of allocation. So again, that's something that we have done just for that reason, is not knowing what that volatility is going to look like. So that's the only move we've made. I don't know that there's any other recommendations there. I mean, I would say we stay invested, through the market, through these times. Is they're going to go up and down. We know that. But the general fund has a different mandate. We felt that it was prudent to make that change now, and not be kind of in a position where, the 10-year goes up to 5+%, and, we're at a negative position in the portfolio, and the town has to raise money or allocate funds a different way. So, we heard that concern. We've been keeping an eye on it. They think things turned probably in the wrong direction. And so we went ahead and made a quick change there. All within the realm of the investment policy statement.
Great. Any other questions for Dominic and his team while we're on here? Not seeing anything. Dominic, thank you for everything.
You're welcome.
And see you next quarter.
Sounds good. See you all. Have a great night. Have a
Okay.
good weekend. Bye-bye.
Number 3 of the agenda, discuss possibly vote to recommend to the town council a nominee for investment committee chairperson. It's amazing how everyone looks away at the same time. I assume that, I will work with the commissioner liaison, Commissioner Givings, to try to identify alternatives to get a chair here in this role.
And Eric, we understand that you are with us temporarily, and we appreciate your service.
No, I appreciate that. I wish I knew enough to step in and help out. But being a newbie, I don't think you want me running the circus.
I get it. I understand. Having been having been a prior chair to this committee years ago, it takes a lot of knowledge of what Dominic does, and it's just
That's right.
it's and we had that with Brian, so unfortunately couldn't
Yes,
continue. Any other committee member comments? None?
None.
None.
Mr. Nelson?
I do not.
All right. With that, can I have a motion to adjourn the meeting?
Motion.
Second.
All in favor?
Aye.
Aye. Thank you, everyone.
Good to meet y'all virtually.